Passenger numbers at Changi Airport have taken a tumble with the demand for air travel affected by the COVID-19 outbreak. For the first 2 weeks of February, numbers were down by more than 25% compared to the same time last year. And part of this drop is due to a more than 85% decline of the number of people traveling between Singapore and China. Changi Airport Group says the impact has been amplified by high volumes of travel during last year's Chinese New Year, which was in February. And there's also been a 90% drop in the number of weekly flights to China. And as of 14th of February, there were about 40 weekly flights to fewer than 10 Chinese cities compared to 400 weekly services to 36 destinations previously. And it was quite the opposite in January, though. The airport handled nearly 6 million passengers, more than 5% up on January 2019. And there were almost 33,500 landings and takeoffs, a rise of just over 2%. But air freight declined 8.4% to 157,000 tons for the month, and January's figures were partially affected by Chinese New Year, which fell this year on the 25th. Now, to try to boost customer numbers and to support their tenants at Changi Airport and Jewel, Changi Airport Group will run special promotions, including free parking under certain conditions, as well as gift cards and up to half price off Jewel attractions. Meanwhile, Singapore Airlines has put a hiring freeze on all ground positions. The airline is monitoring the evolving situation closely and may implement additional measures if needed. SIA says that it won't do anything that compromises its long-term competitiveness. And this comes a week after SIA announced service reduction across its network due to weaker demand. Dr. Nitin Pangaka is Associate Professor of Strategy and Policy at NUS Business School. Dr. Nitin, thanks for joining me. Let's look at the numbers. A 25% drop in the first half of February, and perhaps are we expecting more to come?
Maybe a little bit more. I think the SARS drop was about 30%, and I think 30% was also during the global financial crisis. But a key factor here is the depth and breadth of the spread internationally. So if the depth and breadth is greater, then we can continually see a bigger drop. If the depth and breadth are contained in new locations, new countries, then the drop may be maybe somewhere 30%. We could see a bottom soon.
All right, well, you mentioned there about SARS and the global financial crisis. So what were the numbers like during SARS and the global financial crisis, though, and as well the flu pandemic in 2009?
Right. So basically, there's slight difference. So SARS was a basically regional drop in demand, right? So it was a decline of about 30% in the traffic. The global financial crisis was twofold. One was the drop in demand, but the other was the drop in yield, because a lot of business passengers probably stayed away from travel because of the bad conditions. So I think the load factor decline was much higher in the total decline was much higher during the global financial crisis. I think the flu pandemic was intermixed with the global financial crisis, so they kind of were together. So I would say GFC was the global financial crisis was the biggest impact probably. SARS was relatively short-lived, so that was the bounce was much quicker in that case.
So let's look at what SIA and Changi Group are doing. Do you think what they're doing, perhaps might help mitigate the impact?
I think SIA is probably in the first stage of dealing with the decline, which is it is canceling flights and hiring freeze and so on. In the past, it has also had some retrenchment exercises. It has also offered voluntary retirements and so on. It has also offered pay cuts to people. So we haven't seen any of those. We have just seen so far the reduction in flights. If it persists, then we will see the other measures in terms of retrenchment or voluntary retirements or even across the board pay cuts.
Dr. Nitin, how will the operating performance of SIA and Changi Group be affected? After all, SIA says it's not going to do anything that will affect its competitiveness, and Changi Airport Group has seen, passenger numbers fall drastically.
I think Changi Airport Group is in a better position. Its profitability is generally high. I think it has a stronger balance sheet. Its fixed costs are probably lower than SIA. So I think Changi Airport Group should be okay as long as the crisis is not doesn't last very long. SIA may be required to do a little bit more as we go farther and the crisis lasts longer. So I'd say among the two, Changi Airport Group is probably in a stronger position to deal with it. SIA might have to go to the other measures in terms of limited scale retrenchment or pay cuts if the crisis persists.
Well, let's look at the airport. You know, it's also working to get customers back into shops with its various promotions. Do you think this will work? Do you think it's enough?
I think that's mainly targeted at the domestic shoppers, right? And I honestly don't think it will be enough, but they are trying whatever they can to get more business, to get more shoppers in, to generate more revenues. So they are doing whatever is in their realm of possibilities, but I don't think it's going to make up the decline in the flight numbers.
All right, so if you don't think it's going to make up, then what are your expectations for the next few months or even for the next half year then?
I think SIA has more pain to go through. I think their debt equity ratio is sort of middling. It's not too bad. So they should come out okay. And as long as they're clear that they're not going to compromise their long-term competitiveness, and it's a service business, so people's morale is very important. So as long as they keep that, that's okay. They should be okay in the long term. Changi Airport Group, I think they just have to hunker down and just let the storm blow over, and I think they should be fine. I think their financial position is quite strong. And their profitability for whatever business they do is pretty good as well. So I would say the worry is less on their part, the more on the Singapore Airlines part.
All right, thank you very much, Dr. Nitin, for your perspective. We'll be speaking with Dr. Nitin Pangaka, Associate Professor of Strategy and Policy at NUS Business School.